Funding for Market Journal is provided by the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs analyzes volatility in cattle markets. Alastair Stewart gives an overview of harvest progress in South America. Cory Walters discusses crop insurance, and Steve Mason talks about saving and using Roundup Ready soybean seed. Mike Briggs is our cattle market analyst this week. Data for the month of January show the price for all fresh retail beef fell for the 6th month in a row. The average cost of ground beef passed a landmark by dropping below $4 a pound for the first time since July 2014. 2015 was not a good year for international beef trade. Exports were down about 12% from 2014. However, USDA believes global demand will be better this year, with increased U.S. production lowering prices. We talked with Mike Wednesday morning about domestic and foreign beef demand, profit in the feedlot, and the recent up and down movements in cattle markets.
We're kind of starting a little transition. I think we're coming into our spring rally. So, you got a little back and forth. Now, last week, the board never backed up a single day, tried to back up pretty hard yesterday and snapped right back. So I think we're in a pretty good situation. We finally got rid of the majority of the really big cattle, and we're starting into some dramatically tighter supplies.
Do you think this is going to be a little easier to market now maybe than it has been the last few months?
Let's hope so, because I know the captive supply numbers are also coming down, so the packers don't have those to lean on, so hopefully we'll see a little more competition.
If the heavier weights come down, there's still going to be more cattle this year. Production is still going to increase, yes?
Not during the next 3 months.
Sure.
I don't think so. I think the next 3 months are really going to be tight. Now, the thing everybody wants to know, when we're going to quit making these cattle big. Well, we're going to quit making these cattle big when the spread between cost to gain and what the selling price is comes together, and it will. But until that happens, I think you're still going to have big cattle. So yeah, you'll have a part of the year again where numbers come up and they're still going to be big, and we're going to shoot ourselves in the foot again, probably.
Later on this year, though, do you expect production overall to increase across the U.S.?
I think you're really a year away from that. I think next year's a year where you're going to see a lot more cattle, because I just think it's just going to take that long to do it. But you're going to see times where we've kind of, maybe stacked some cattle against ourselves, and that's going to cause a little problem in the market.
When do you think profit might return to the feedlot?
Yeah, that's a great question, because we're not there yet. I think you could see some cattle that are profitable in April, maybe the latter part of March, depending upon the performance. We've seen our gains haven't been hurt, our conversions have been hurt by the mud. So as it dries up and you get a little further into this thing, some performance will come back. I think we'll see this market get in the 140s. I don't know that we can get past 150, but I know we'll get into the 140s. I'm pretty confident with that. Some cattle should make a little money there. But after that, I don't know. I think it's going to be a tough deal, because the rancher's going to get to hold the dirty end of the stick. He's had the nice shiny end of the stick for several years, and he's going to get the dirty end of the stick here, because you're going to see feeder cattle really go down, and that's where your margins are going to come from. They're not really going to come from the market escalating, I don't think.
Do you think people are going to be more aggressive to place in the feedlot?
If they can see margins, they will. If they can't, I think that they're going to struggle.
What do you think you need out of demand in order for profit to return?
That's a great question, and we talked about this a little bit before we started. I'm really concerned that the retailer has never brought beef prices down relative to how much cattle have gone down. Therefore, we haven't stimulated the type of demand I think we need to stimulate to really push this thing higher. Now the retail will say, oh, demand's just fine, we're doing great with the, well, and so therefore, if they can't raise their prices to the consumer, at some point, there's going to be a squeeze there, and somebody's going to lose some money, which is probably going to be the packer. But it's just going to be really hard, I think, to force beef prices much higher because they've never come down.
Your huge concern is that pork and chicken are just so relatively cheap.
And they're going to stay that way. Those two products are going to stay relatively cheap to beef forever. And I think what we did when we got this thing really high is you forced people over there. Now you got to get them back, and we've never dropped prices enough to really pull them back, and that's a concern of mine.
Are you buying any corn ahead right now?
Not buying any corn ahead, buying hand to mouth, because I personally don't believe corn's going anywhere. And so now you're getting to that time of year, well, what kind of planting conditions are we going to have? You know, earlier we thought they were maybe going to be wet, but the El Nino seems to be weakening a little bit. So maybe everybody gets in there fast and gets everything planted, and you got a lot of acres. Then this thing's not going anywhere unless somebody has a drought. So I don't get too wound up about chasing corn.
Any idea that exports might return here if the dollar loses a little strength?
You would like to hope. We need exports. We've got to have exports. They've got to be a key part of this on a consistent basis, or we're really going to struggle because pork and chicken are so cheap.
So to recap, where do you see prices moving over the next 4 weeks or so?
Well, we're going to trade cattle, I think, this week somewhere between 136 and 138. I think eventually we'll get over 140 as we get closer to April. Supplies get tighter. Maybe we get a little bit better demand when it warms up outside. I think we'll eventually eclipse the 140 area, but I just don't know how far we can go past that.
Next week, we'll look at corn and soybean markets with DTN's Darren Newsom at the Triumph of Ag Expo in Omaha. Farmers in Argentina are wrapping up their growing season for corn and soybeans, while those in Brazil are harvesting what's expected to be a record soybean crop. The USDA's latest estimate put total output at 100 million metric tons, or about 3.7 billion bushels. That's less than what U.S. growers raised in 2015, but Brazil has been the world's leading soybean exporter since 2011. On Wednesday, we talked with DTN South America correspondent Alastair Stewart from Sao Paulo to get an update on conditions, starting with a look at harvest progress in Brazil.
Harvest is going now pretty well after a very slow start. Basically, the backstory is that Brazil was very late to plant this year because of dry weather, and therefore the harvest was delayed. But now we're starting to build up some pace. The harvest is about a third complete now, which is more or less on track.
And what are we seeing for yields?
Yields in Mato Grosso and the Cerrado are, well, particularly in Mato Grosso, are slightly below last year, slightly below averages. However, the South has received a lot of rain over the last 3 months, and their yields are expected to be rather higher. And that will rather compensate the lower yields in parts of Mato Grosso. Overall production is going to be very good? Yes, yes. We're talking about something in the region of 100 million metric tons once again. When during the drier spells in Mato Grosso in November, December, and then people were talking about lower numbers. What we're seeing now with the early yields, particularly out of Paraná in the south, is that maybe the losses won't be any losses in Mato Grosso will be partially compensated. So numbers around 100 million tons at the moment are the norm.
What's the forecast for the second crop then, which would be corn in many places?
Because it's a second crop, it's planted, the corn principally is planted immediately after the soybeans. Because of the delays in the soybeans, there's a knock-on effect on the corn. The delays, in fact, mean that many producers are planting the corn outside the recommended window. At the moment, the second crop corn is about 50% planted when it should be pretty much, well, 75% planted, and it should be pretty much all planted by the end of this week.
How big are those concerns, Alastair? I mean, is that a concern to overall production this year?
Yes, it certainly is, because basically what you're doing with the second crop corn is you're trying to squeeze another crop in before the summer rains end, normally in about April. So every week that you're delayed, that means that you have a bigger chance of dry weather hitting the crop during kind of key reproductive phases. So yes.
What's the profitability for farmers there this year?
In Brazil, fair to good. I mean, obviously, considering the low price levels that we're talking about internationally, I mean, they're excellent. And that's mainly because of the devaluation of the Brazilian real, which basically fell a third against the dollar last year. And we're continuing to see the positive impact on margins through this year, obviously.
What's the outlook to the west then in Argentina for corn and soybean production this year?
Yeah, Argentina is it's looking like a bumper year down there at the moment. There were some concerns over because of a dry spell in the kind of the heart of the grain belt in Buenos Aires and Cordoba in January. It's the rain has returned there though, so soybean and corn crops are looking basically excellent. We're looking for something of the order of about 60 million tons for soybeans in Argentina, and a bumper crop for corn as well, something maybe in excess of 25 million tons.
I'm wondering if farmers there have changed any of their management practices or long-term practices because of the new presidential policies enacted.
Yes. In the short term, they planted a little bit more late corn after Mauricio Macri was elected. Obviously, he was elected in the middle of the summer cycle, so there wasn't that much they could do for this year. What we're expecting to see though is a big increase in wheat planting, possibly when that starts going into the ground in the autumn. So yeah, there will be changes, and there will be more changes to come. I mean, longer term, this kind of the end of the control of the currency, and also the end of the controls on corn and wheat, will mean inevitably that Argentine farmers start investing more in their crops as well.
Have they still been holding soybeans, or have most of those been able to come to market?
They've sold a lot of soybeans over the last couple of months, particularly in January. So those huge stocks that they had at the end of last year have been diminished. They haven't completely disappeared. There are no reliable numbers on this, so it's a little difficult to go into. But say if you were to say that they had 15 million tons of stocks of soybeans in October, then now they've got maybe 7 million tons. They've cut it by half or something like that. So they've sold a lot of soybeans, yes.
Is there any concern right now about El Nino flipping to La Nina for the next growing season, Alastair?
There is concern, yes. I mean, we don't have any better data down here about whether that will actually happen than for you, but yes, there is that concern. Obviously, inevitably, La Nina will not favor crops down here.
The USDA will update its forecast for production in Brazil and Argentina Wednesday in its March supply and demand estimates. You may have learned this week about efforts in Congress to present legislation on mandatory and voluntary GMO labeling. The mandatory and voluntary bills are separate, obviously, with the latter advancing out of the Senate Ag Committee. Next week, Nebraska Extension Public Policy Specialist Brad Lubin will join us to discuss the debate around those bills. The March Nebraska farmer says with depressed commodity prices, farmers across the U.S. are talking more about profit margins. This month's magazine says while things change depending on location and timing, there are two constant factors at play when it comes to improving margins: input costs and yield. For Brad Williams, who farms near Cedar Bluffs, it's about monitoring and managing both. Since what works on one field may not work on another, Williams says on-farm research and aggregate data come in handy. You can read how Williams puts on-farm research to use on his operation in the March Nebraska Farmer. As we told you in December 2014, the patent on Monsanto's first-generation Roundup Ready soybean trait was expiring. We talked about the challenges to saving and using that seed in future crop years. As we said then, it's imperative growers check with their seed suppliers before even beginning the process. University of Nebraska-Lincoln researchers are completing studies on the performance and profitability of using Roundup Ready or RR1 seed. Earlier this week, we talked with UNL's Steve Mason about those results and the background of saving seed for future use.
Well, there's been a tradition throughout the world, but in Nebraska and elsewhere, to save seed of self-pollinated crops. So, and particularly in Nebraska, there's been a history of saving soybean and winter wheat seed for planting the following year as a way to control seed costs.
Recently, the Roundup Ready patent has expired, which would give producers under certain circumstances the opportunity to use that seed. Can you kind of outlay how that works?
Well, when the U.S. government and the patent office has legality that you get a patent and then you retain the rights to that for 15 years, basically as a way to protect your investment in the research and to recoup the cost of that research. So the Roundup Ready 1 came off a patent a little over a year ago, after those 15 years in which the private seed companies was recouping their cost of developing that variety, those types of varieties.
Over the last few years, you've done some research at UNL using saved seed at the ARDC near Meade. Tell me about the process and what you were looking at.
Well, we were specifically looking at whether saving seed of Roundup Ready 1 varieties would be both yield and economically viable for Nebraska farmers.
And what did you find?
We found that, first off, that in our production environments here in the western edge of the soybean producing area, that our yields were a little bit higher for the Roundup Ready 2s than the Roundup Ready 1s, but really pretty small, about a 2% bump in yield. And then we went through and interviewed seed producers and gathered information about the cost of saving seed and then calculated it out. And we found that if you have access to Roundup Ready 1 varieties and saving seeds, provided substantial financial benefit to producers.
What would be the substantial benefit?
Our calculations would be somewhere $30 an acre or maybe a little bit more than that. However, there are some real limitations in being able to do this. One of those is not only the question of the protection or the patent on the transgene for Roundup Ready 1, but also the availability of varieties. Most varieties are also patented, as is the transgene for Roundup Ready 1. So in order to make this work, both the variety and the transgene have to be off of patent.
How difficult is it to have enough seed, make sure that seed is clean, make sure it tests out okay? Can you explain kind of the difficulties that might go into that?
Well, there's a number of costs that are associated with doing this. Saving seed is not an easy button. There are labor costs, harvesting, identity preservation, keeping things separate, storage during the winter, having seed cost. In Nebraska, there are not very many seed cleaning facilities, so the transport to have it cleaned and back are all substantial cost and inconvenience for producers who want to do this.
So a producer listens to this and says, I know my margins are going to be tight this year, maybe this is a way I can gain an advantage. What's the advice to that producer before he or she considers doing it?
Well, there's a number of things that have to happen. One that already happened, and that the Roundup Ready 1 transgene is off of patent. But then you also have to be able to identify a variety that has the Roundup Ready 1 on it that is off of patent or off of varietal protection. And if it's not off of that, then you'd have to obtain a licensing agreement with the seed company or whoever owns that, which is probably not very easy to do. So varieties that come out of a public release, that come out of university programs, of which there are a limited number of those that are available in the marketplace, would be the way that one would have to go to do that.
You can find more information about Steve's research on the Market Journal homepage. The Risk Management Agency's crop insurance price discovery period has ended. The projected marks are $3.86 per bushel in corn and $8.85 per bushel in soybeans. Those levels are noticeably lower from last year by 29 cents in corn and 88 cents in soybeans. The latest Cornhusker Economics article from UNL's Department of Ag Economics looks at net income risk for corn producers in Nebraska this year with the use of crop insurance. The study's authors, including Nebraska Extension economist Cory Walters, found significant differences in costs and returns between two specific counties in the state. Because of that, Cory says it's difficult to recommend insurance options that would apply to all operations. We talked with Cory Thursday morning and began by asking about the findings.
We were after building a model flexible to producer-specific characteristics. And that comes both from agronomic differences and, of course, economic differences.
Tell me about this study. You studied two operations, one in Saunders County and one in Custer County. What did you find that the differences were between those two counties alone?
Yeah, the primary differences came from family living and off-farm income going into that cost function. Also, expected prices at fall are quite a bit lower, or a little lower in Custer County, and just as important is that price-yield correlation as you move west starts to decrease. That brings back a little more risk to that farm in case of a bad probability event.
The prices are lower to the west because of basis primarily, yes?
Yes, that's right.
Okay, so one of the authors you're working with is a farmer, and he's saying, okay, so I have this data, but how do I use it on my operation?
That's right, yeah. The idea was to build a model that would allow you, anyone with farm-specific information, to identify what their risks are given their unique characteristics.
Which means what? As you look at some of the graphs and the revenue protections that you could select 85, 75, et cetera.
Yeah, so the outcome is definitely changes over both space when you're in irrigated Saunders or irrigated Custer, and also when you're in non-irrigated Saunders compared to irrigated Saunders County.
How big does it change? How much does it change?
Well, the results are a little surprising. Insurance picks up relatively about the same amount of revenue risk, but the farmer is left holding quite a bit different amounts of risk they'd have to pay in case of a bad event.
Because?
Because the risks at those locations are different. The costs and the risks, those cash needs needed at the end of the year are also quite a bit different.
So for instance, how do you look at this? You have to have X dollars if you're trying to survive through a catastrophic event?
That's right. That's what we're trying to get is to identify how much money do you need to have on hand in case of a bad event happens. And in this case, we looked at a 5% event, which is then a 1 in 20 event.
So give me the dollars per acre that you saw that people might need to have on hand.
Yeah, so if you're in Saunders County and we experienced one of these bad events, you're looking at about $144 an acre in irrigated. If you jump over to rain-fed Saunders County, it jumps a little bit, about $24 or so to $167, $168. And then if you go out to Custer County, that value drops down to $115.
And that's with 85% coverage, yes?
That's with 85. That's the 85 trend adjusted. Everything you can get into that policy that would increase that APH as high as possible.
How do you look at using crop insurance? Do you use it to protect revenue, to try and maximize revenue, to protect losses?
You're using it as a tool, or at least the way we're looking at it, is a tool to just allow you to survive into that following year. In a year like this that we're entering, crop insurance will start paying well after you're experiencing a loss. So there's going to be a good chance of losses that crop insurance will not pay that you, the farmer, has to pay.
So you should look at as to how much are you willing to stomach as a loss?
That's right. If you're willing to stomach a lot of wealth, to lose that wealth, then you can back down on crop insurance. If you don't have the wealth, you better be buying up on insurance, given that the insurance is working well for you, meaning that you have a good APH relative to your expected yield.
You can find the Cornhusker Economics article on net income risk in Nebraska corn production through a link on the Market Journal website. It contains more information, including graphs and tables with additional data. Now, with this week's weather forecast, here's Nebraska Extension Associate State Climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Of course, during this last week, the primary business of duty for the Central Plains was venially dry conditions. We had a couple waves move through that did generate some light precipitation across scattered portions of central Nebraska. And then, of course, earlier in the week, we had a little bit of light snow reported up in portions of northern northeast Nebraska, with the more concentrated accumulations across portions of Iowa, southern Minnesota, and then points off to the east. Now, during this next 7-day period, we are turning our attention to the energy starting to move into the western United States, and what will its eventual impacts have on the central and southern plains. Is the models are kind of up in the air of how to treat that upper air low, whether to bring it out in pieces or to bring it out as a cut up of air low, and either one of those solutions can give a widely different scenario for the central plains. So let's show you the latest and what we expect with the upper air models, and the first thing I'll draw your attention to is the wave that passed through over the last 24 hours. Now strengthening over the Great Lakes region, so we will see some precipitation in the Great Lakes region, but for our region we're going to get a temporary lull in the activity and a fairly nice day today as we have a high pressure ridge building into the region, so we should be well above seasonal totals. pretty much in the 60s, and then as we go into tomorrow, we're going to see a southwest flow aloft as this trough tries to come in shore, and that is going to allow surface flow to come out of the south, as will lift our temperatures a few more degrees. So we're going to be pushing the upper 60s to possibly low 70s, particularly across the southwest part of the state. And the increase in moisture may actually help generate a few showers, particularly as we get into the evening and overnight hours. Although it doesn't look to be widespread, it looks like the more concentrated area of thunderstorm activity may actually be more down in eastern Kansas and eastern Oklahoma. But as we get into Monday, we'll start to see this energy kicking out. And that will have the ability to once again generate thunderstorm activity. And right now, I would say the best bet for severe weather outbreak would be from central Kansas southward through eastern Texas. And as we get on the northern end, we may touch a thunderstorm here or there in eastern Nebraska, but right now I'd say the odds bear more favor toward the south of us. Temperatures once again will be approaching the 70-degree mark. It's going to be a question of how much cloud cover we get with this system and whether or not we breach the 70-degree mark, but it should be a fairly nice day. But then as we get into Tuesday, the main piece of that energy starts to move toward the Great Lakes and weaken, and we get a little bit of cooling on the backside of this, so we're going to be back down to more seasonal temperatures, and we'll still carry a chance for a little bit of precipitation, at least in the southern half of the state. Now as we go into Wednesday, we see that upper air low trying to get itself agonized and moving a little bit toward the north, and we have some moisture coming up into central Kansas, so some of this may make it into Nebraska, but it looks like the cold front at the surface may actually keep most of the concentrated moisture to our south. As we get into the day Thursday, here's that upper air low, and we see rigid high pressure building in, so looks to be fairly nice conditions as the moisture stays to our south. And we see the same type of scenario on Friday, although some of this moisture looks like it may get in here late Friday night. In terms of the 8 to 14-day forecast, we see warm temperatures all the way through the extended, and in terms of precipitation, with that low to our south, it looks like a dry trend all the way through at least next Tuesday.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, corn and soybean production in South America, crop insurance, and saving Roundup Ready soybean seed. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Darren Newsom will be our market analyst, and Brad Lubin will discuss GMO labeling efforts in Congress. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.